What is the main reason that you are losing money in the markets right now? Most Forex gurus are telling you that it is your psychology and that you need to heavily work on the psychology. You need to read 10 trading books and then you will finally achieve profitability. In my opinion, that is total bullshit. The main issue is that you do not have a trading edge. When you look at the most successful hedge funds, do they invest millions into psychology coaches or do they invest millions into data research and data mining? It is of course the latter, because if you have a great trading edge that no one knows about, if you have a unique advantage in these markets, well then the psychology part is not that hard to deal with. Now, I'm not saying that psychology is not important, because psychology is very important, but most people do not have a trading edge. So you need to build a trading edge first and then you should work on your psychology. Online, you will see statistics such as trading is 70% psychology. I used to believe in that and I used to repeat that sentence in every other video, but as I got a bit wiser in these markets, I have noticed that having a specific unique trading edge is what will make you successful. And if you don't have a trading edge, well then everything else falls in the water. You will just consistently lose money in the markets, no matter how good your psychology is. So yeah, think about it. The most successful people are investing millions into data research, into researching a new trading edge, not in psychology coaches. And in this video, I want to show you how you can build a unique trading edge that is based on market fundamentals. A little bit of a backstory. So I have always been a technical trader. My OG strategy has been purely 1 hour chart, no indicators, just price action, no news. So just looking at the candles, searching for chart patterns and trading off of that. Now, I love that approach. It is very simple, very easy to learn. And again, it's very easy to trade as well. You just watch the charts, search for specific patterns and trade off of those patterns. I'm still trading that strategy, but on top of that, I have decided to add another strategy that has to do with market fundamentals. So for the OG strategy, my win rate is on the lower side. I don't get many trades per month. My win rate is around 20 to 30%. And with this second strategy, I'm aiming to improve that win rate and get some more trades, okay? With implementing fundamental trading, my win rate can easily go to 50%. So that has been my journey for the last couple of months. I have been heavily researching fundamentals. The two great resources that I have used is the Forex Factory calendar, which I will show you later in this video. That is a free option that you can use to learn about fundamentals. It's awesome. And the second one is ChatGPT, okay? If I had a question about a specific economic event and I didn't really understand it, I asked ChatGPT, I got a pretty comprehensive answer, and 95% of the time ChatGPT gave me a correct answer. Sometimes it was wrong, so you could not fully rely on it, but it is a great free tool to get introduced into fundamental trading and analyzing economic numbers. But a big game changer has been the EdgeFinder software. Okay, so this is the software that trader Nick developed. I would say this software is so good. It takes into account so much economic data that even the top traders, even the top hedge funds would have some great success if they implemented this software into their trading. And this software doesn't just give you a buy or sell signal for a specific, could say, currency or a specific asset. No, you can actually learn about the fundamentals from this software. So as I will show you, it gives you a breakdown exactly how it builds a specific score for a specific asset. And I am a big believer that you need to understand what you're trading. So you could just buy this software, look at the score. Let's say you look at gold, you see that gold has a bullish score on the EdgeFinder, and then you look for buy setups on the charts. But if you don't truly understand how that score is built and you don't understand the current, let's say, macroeconomic picture, the current sentiment, then you're not really a good trader. So I'm a big believer, again, in actually knowing exactly why you're buying or selling a specific asset at a specific time. And that's why I love the software, because you get a breakdown of the numbers, and you can see exactly how that specific score is built. So enough of the talking, let's jump onto the PC. Let me show you exactly how I use the software and how you can implement it into your trading. So I said that I will show you the Forex Factory calendar, and this is it. So this is completely free, and if you don't know anything about fundamentals, this is a great starting point. And here you have this week news, only red folder news, the most important news. And let's take an example of the non-farm payrolls. Okay, very important news event, highly volatile news event. And you can see, if you click this button right here, you could see a bit about this specific news event. Okay, you could see if the actual number is greater than the forecast. You always get the forecast and then you get the actual number. You get the previous number as well. So if the actual number is greater than the forecast, that is good for the underlying currency. So this Friday, if you get the actual number bigger than 137,000, then US dollar could appreciate compared to other currencies. So I'll put a link to this Forex Factory calendar. Again, here's the filter. It has all currencies. The dollar is of course most important, and then event types, and you have the red folder and the less significant ones. I just focus on the red folder news. So now let's go to the EdgeFinder. So this is it. This is the actual software. And this is the page that I look at every morning. What I do, same as Trader Nick, I just remove the neutral bias. Okay. And then you get a reading of which currencies are very bullish, bearish, or very bearish. Currently we have gold is the most bullish. It has a score of 8. And Aussie CAD is very bearish at -10. So it has the lowest score. So if you were a trader, you could be looking for buys on gold and sells on Aussie CAD. Okay, so that is the main part. And here you can see exactly how this score is built. Okay, exactly which criteria is looked at to build this score. First, you have the sentiment, then you have the technical analysis aspect. So this software even takes into account technical analysis, which I don't really rely on. To be honest, for my trading, I focus on the sentiment and I focus on the economic data. I do the technical part on my own, but here you have it implemented into the score. Okay, so commitment of traders, very important stuff. This tells you what the big players, the big institutions are buying or selling. Currently, they are neutral on gold. So last week they haven't really bought, they haven't really sold any gold, but what they have sold is a lot of Aussie CAD. Okay, bigger players, the players who actually move the markets, the players who are always right, have sold a lot of Aussie CAD. Second is the retail positioning. Now this is really clever because if retail is very bearish on gold, that's a bullish signal. Why? Well, because retail loses money 95% of the time. Okay, institutional money makes money 95% of the time. Retail loses money 95% of the time. So you want to do the same as the professionals and you want to do the exact opposite as the retail. And also, what is this commitment of traders report? This is a report that comes out once per week and it tells you what the bigger players are buying or selling. Yes, it's hard to believe, but they actually do have to report to authorities what they're buying, what they're selling, let's say after 1 week. Okay, so yeah, it's a lagging indicator, but it still gives you a pretty good picture of what they are doing. So I love that. I love that part. Retail positioning is currently positive for gold, meaning retail is short. Okay, so you want to do the opposite. Seasonality is pretty smart as well. It gives you what is this asset doing, or what has this asset been doing in March. It is currently March, from last 10 years. Now, if that is kind of complicated, you could go to, let's say, the monthly seasonality here, and we're looking at gold. And you can see in March, gold usually is positive. So in March, it's usually a great time to buy gold. But for example, later in the year, in Q4, it's actually pretty smart to not be a buyer, because gold performs much better at the beginning of the year, but much worse later in the year. So this is the last 10 years, okay? This is the 10-year average. That is why seasonality here in the top setups is positive. Trend is positive as well. So I'm sorry, I have to correct myself. I'm looking at the seasonality. The only thing I'm kind of ignoring is the trend. Seasonality is a great thing to look at, but the trend, I'm doing my own technical analysis, so I'm not really looking at the trend. So what you can do is just deduct the number 2 from this number. Okay, you could do that if you want. One thing I also want to tell you, I have recently attended a trader conference, and at the conference they were selling a seasonality software for like 1,000 or maybe 2,000 euros. So very, very expensive. And the only thing you got is you got this. Okay, so you got exactly what you can see here. And with EdgeFinder, this is integrated into the whole software. So you get a bunch more things along with seasonality. So it is currently the anniversary of the EdgeFinder, and they're doing a 45% sale on their software. So make sure you click the link in the description of this video and use the code that is mentioned in the description as well. I believe its code is Marco. Okay, so MARKO, but check out the description to get 45% off. So that's the seasonality, the trend. Again, technical analysis, I'm going to ignore this. I'm doing my own. GDP, okay, it's negative. So the current economic data for GDP is bearish for gold. MPMIs are bullish, SPMIs are bearish, retail sales are bullish, inflation is kind of neutral, employment change is bullish, unemployment rate is bullish, and the interest rates are bullish as well. So I will not go too deep into this economic data. This really takes a while to understand and to research, but here you get a nice reading of the numbers. So for the Aussie CAD, very bearish reading, commitment of traders, the big players, the institutional money, heavily short, retail is long, so you're getting a negative reading here. Seasonality, negative. So if we go to monthly seasonality, we type in Aussie CAD. Okay, let's see for March. Yeah, it's negative. See, so Aussie CAD is better to buy later in the year because you get positive months later in the year. Trend is negative. GDP neutral, PMI neutral, SPMI is bullish. Retail sales are negative. Inflation is negative, employment change negative. So I'm guessing that is all for the Australian dollar. Okay, so the inflation is negative for the Australian dollar because again, you're looking to short the Aussie, you're looking for the Aussie to depreciate against the Canadian dollar. Employment is bearish in Australia. Unemployment rate is bearish for the Australian dollar. And the interest rates are neutral. So how can you actually use this in your live trading? I will give you a specific example. I'll show you a trade that I took recently on gold. Okay, so it was 4th of March. This is the 1 hour chart. And at this point, I woke up in the morning and I saw gold had a very bullish reading on the EdgeFinder. Very, very bullish. The overall macroeconomic picture was very risk off. So stocks have been heavily dropping, which means metals should go up. If you don't know what is a risk-off environment, it is when basically stocks go down and safe haven assets such as gold should go up in value. So EdgeFinder, very bullish. The overall sentiment, the overall macroeconomic picture was very bullish for gold. And that made me look for setups. And then I opened the 1 hour chart. I saw a nice, very clean break and retest forming. Now, this is something I have taken from my last strategy or from my OG strategy. And it's a very clean break and retest. I would definitely take this trade according to my OG strategy. So again, I'm waiting for the retest of this high. In terms of the stop loss, well, I did say I'm looking for a big stop loss. So I'm looking at the 4 hour or I'm looking at the daily chart. In this case, I looked at the 4 hour and I decided to place the stop loss just below this major swing low. Okay, that was my level. What is the reason why I'm using such a big stop loss with fundamental trading? Well, fundamentals take a long time to play out. In the markets, you could get a lot of noise before the fundamentals come into play, okay? And then the price can easily take you out with a small stop loss before the market actually moves in your predicted direction, okay? So this was the play. This was the stop loss, very big stop loss compared to what I usually use. And then the markets just ranged around, and this is exactly what I was mentioning. I almost got taken out. I was very, very close to being stopped out. And yeah, we just ranged around until finally the fundamentals came into play and the market decided to go up. I then trailed this position. I trailed it on the daily chart. I think I actually trailed it on the 4-hour. So up to you what you want to do. You could use a fixed, let's say 2-to-1 or a 3-to-1 or a 5-to-1 risk to reward. I prefer to trail my positions. I believe I trailed it somewhere around below this swing low. And then I got taken out for a 2.4R profit. I didn't risk the full 1% because I'm still live testing this strategy. So I'm doing reduced risk, but you get my point. Okay. So again, to recap, what did I do? Well, I woke up, I looked at the EdgeFinder, I saw which assets are printing a very bullish or a very bearish signal. I saw gold. Nice. Let's take a look at gold. I monitored it on the 1-hour during the day. I found a very clean break and retest. I was very happy to take this. I then placed a buy limit. I found the best level for me personally to put the stop loss, and then I just let things play out and I trailed the stop loss for a very nice gain. Now, yeah, if I trailed it or if I didn't lock in profits that soon, I would be running like 5R, but again, trading is not perfect, so I got taken out prematurely. It is what it is. I'm still very happy with the trade. I'm very happy with how I executed it. And yeah, that's about it for the example. So let's jump back into the software. So your question may be, look, Marco, this all looks great, but how can I backtest this? How do I know this really works? Because there is no historical data. Actually, there is historical data. Okay, if you go to the score history and the score history graph, here you could see the history of the EdgeFinder for the last year. And this is exactly what I used to backtest my new strategy. Okay, I looked at, let's say, let's look at, I don't know, August. Okay, let's take a look at August 2024. So what I did is I opened my charts. I opened EdgeFinder from August. I started the backtest. If for that specific day, the EdgeFinder gave a very bullish reading, well, then I looked at the charts. I looked, are there any high probability bullish patterns? If there were, I took them. So this is an awesome feature. You can actually backtest the last 1 year of price action and determine how profitable your strategy is. What I found is the win rate was around 50% for this strategy, which is great. It is much better than the OG strategy, but the risk to reward was a bit lower. So for my OG strategy, the risk to reward tends to be very high, around 4, 5, maybe even higher. But for this, it tends to be around maybe 1.5 to 2 hours. So that is how you could backtest and research your new strategy. Okay, the next thing I want to show you is the economic heat maps. Now this is great because you can see exactly how a specific economy is doing. You have the US, Europe, UK, Japan, you have Canada, you have Australia, New Zealand, China. So you have a lot of countries. The one I focus on is the US. So this is pretty similar to Forex Factory calendar that I showed you, but all of the numbers are in one place and everything is very concise. You could see the date when the number was released. You could see the surprise. You could see the actual number, the forecast, the previous number, and the impact to the underlying currency and the impact to the underlying stocks. Okay, so in this case, this is the US economy, so this is the S&P 500 impact, okay? You can see, for example, the latest one we got was the PCE, I believe, core inflation, March 28th. You can see previous number 2.7, forecast 2.7, and the number came in hotter. It came in at 2.8, and the surprise was a 0.1%. That is bullish for the underlying currency. That is bullish for the dollar. Why? Well, if inflation is going up, then the central bank will most likely need to raise interest rates, and raising interest rates or a hawkish central bank leads to a bullish underlying currency. It leads to a bullish dollar. And the impact on stocks is bearish because when the central bank raises interest rates, the economy contracts. There are less people taking out loans. So there is a slowdown in economic growth. When there is a slowdown in economic growth, that's of course bearish for companies and bearish for stock prices. So as I said, you could not only get a reading for specific assets, you can also learn exactly how these numbers impact the underlying currency and the underlying stock market. Let's take another example, the GDP growth. The last number came out 27th of March. You could see previous number 3.1, forecast 2.3, actual number 2.4. So it was a bullish signal. So this was a bullish news event for the underlying currency and the bullish news event for the stock market. What is the reason? Well, if the GDP is growing, that means the economy is expanding. And when the economy expands, underlying currency tends to appreciate. Stocks tend to appreciate as well, of course, as the economy is expanding. There's more money being pumped into the economy, more money pumped into companies, and the stock prices go up. So I love this section of the EdgeFinder because you can learn exactly how the economic numbers impact the currency and the stock market. Here you can also see the exact GDP numbers, PMI numbers. This is great if you want to do a deep dive into the numbers. NFP, okay, you have inflation data, interest rate data, you have the housing data. I don't go into this section too much. I mainly focus on the heat maps, top setups, and the score history. One thing I also look at, because I am a Forex trader, one thing that is very, very important, it is the carry trade scanner. Now, why is this important? Well, because if you're a Forex trader, you have experienced swaps. You could lose a lot of money or you can pay a lot of money if you're not careful with swaps. Each currency has a different interest rate. And if those interest rates are very different, for example, I don't know, US dollar and the Japanese yen. So if you want to go short US dollar JPY, look at the base currency rate, look at the quote currency rate, look at the difference. 4%, that is massive, okay? So if you're a seller, you're going to be paying a huge amount of swaps. If you're a buyer, you will be receiving a huge amount of swaps. But it is very dangerous to be a seller of US dollar, Japanese yen, and you need to be aware of that. So let's say you have a trade idea where you are very bullish on the yen. You see the Bank of Japan is raising interest rates and you expect for the upcoming, I don't know, 12 months for the Japanese yen to just keep appreciating compared to most currencies. It would be a very bad idea to short USD JPY because of extremely high swaps. A better idea would be to short CHF JPY. Look at this, because the base currency rate, okay, these are the interest rates, is pretty similar, okay? The number is pretty similar and it would actually benefit you to be a seller in this market, in Swiss yen market. So as I mentioned, if you are a Forex trader, you need to know about swaps. Swaps can be very expensive. And if you go short or go long the wrong currency pair, you could end up paying a huge amount of swaps and it can really eat up into your profits. If you're selling US dollar JPY and you hold it for 2 months, I mean, the swaps can be like 20, maybe even 30% of your profits. So even if you make a profit on the trade, it is going to be significantly less because you're going to be paying a huge amount of swaps. But if you short CHF JPY, that's a much better play. The swaps will be minimal, or they should be minimal depending on your broker. How to find out information about swaps? Well, in your MetaTrader, if you go to the watch list, if you hold your finger above an asset and you click details, in those details you will see exactly how much swaps you're paying, on which days you're paying those swaps, and things like that. If you want to learn more about this, we teach all of this and much more at Zentum Trading. So we basically bring you from zero to becoming a consistently profitable trader. If you want to check it out, there will be a link in the description. So yeah, I highly advise you check out zentumtrading.com if you want to learn how to trade. And those are the main things that I use in my live trading. Top setups is my favorite one. Again, every morning I just remove the neutral page right here. I see which setups are active and I then look at the charts. Is anything looking interesting? If it is, I execute a setup. And that is about it. If you would like to get access to this software, there is currently a 45% sale because the EdgeFinder is celebrating its anniversary. So make sure you click the link in the description of this video and make sure you use my code MARKO. I hope you guys enjoyed this video, and just a few last words. I know fundamentals seem very hard to learn, very complicated, very boring. I have been there, so I started using technicals. I have been trading technical analysis for years now, and I was a very stubborn trader. I really didn't like fundamentals. The moment someone mentioned fundamentals, I just kind of stopped listening to them. I thought they were a dinosaur, and I thought I was this master trader using technical analysis, revolutionary stuff, when in real life that is not the case, okay? You need to come to terms that the most successful traders that I have seen in this space and that I have been reading about in, let's say, market wizards, they're using fundamentals. They are using fundamental analysis. Yes, it is complicated. Yes, it is hard to learn, but that is why you have a software such as the EdgeFinder to show you exactly how you can use the fundamentals in your trading and to actually learn what specific fundamentals mean and how they impact the underlying currency or underlying asset such as gold or let's say the S&P 500. My main advice is don't be lazy. This is the stuff that actually moves the markets. This is the stuff that professionals use. I mean, this software is really at the level where professional hedge funds with millions and millions of dollars can apply this knowledge into their investing and trading. It is really, really good what Trader Nick has built. So good luck with your trading. Don't be stubborn, because stubborn traders are never going to succeed. Even if you don't like this software, just do a little bit of research on fundamentals. Use the Forex Factory calendar, use ChatGPT. There is so much free stuff online that you can learn from. If you have any questions, you could put a comment on this video, or you could join Zentum Trading free Discord. So go to the description, go to zentumtrading.com, join our free Discord, either post a message on there or you could send me a DM. I will be very happy to help you. That's it. See you guys in the next one.